If you're a business owner, you don't need me to tell you that running a business is tough. Don't let QuickBooks and spreadsheets slow you down anymore. Now is the time to upgrade to NetSuite by Oracle, the world's #1 cloud-based business system. Schedule your free product tour right now at netsuite.com/wolf. That's netsuite.com/wolf. All right, so Teeka, you are truly a financial celebrity. There's not many of us out there. I earned mine the hard way. Yeah, full circle. You've never been to jail. You've never gotten in trouble, but you are a financial celebrity. And you got there by simply being right, meaning that you have been giving recommendations, I think, since 2015, is it, or even early? 16, right? Yeah. And you have an uncanny ability to find value in both stocks and new asset classes like crypto, right?
Correct.
So let me just start off and give me your background. Like, how did you get into this? How'd you start? You're all a Wall Street guy. Give me the whole story, but in a nutshell.
Okay, so I got my start on Wall Street back in 1989. I was 18 years old, walked into Lehman Brothers and talked myself into a job. The hiring manager looks at me and he says, "You're a sweet kid. This is not for you."
Especially Lehman Brothers back then was a wild place. 55 Water Street, right?
Was a wild, wild place. And I said, "Frank, I'll work for free. Just give me a shot." And Frank gave me a shot. And you could do that in the 1980s.
Right.
And they'd give you a shot. And I had no college degree and no connections. Within 2 years, I was a senior VP at Lehman, the youngest senior VP in the firm's history. Went on to have a career on Wall Street for 15 years. And then got into the newsletter business, teaching people how to get involved in the stock market, teaching people about stocks. And then in 2016, I discovered Bitcoin. And what attracted me to Bitcoin was everybody was saying it was a scam, but it was the only scam I ever saw that didn't go to zero. I've seen plenty of scams on my time on Wall Street.
Good point, because that was my thesis when it crashed was, it'll go to zero. That's right. Yeah, interesting.
So it still was worth $3 billion. And I said to myself, I've never seen a scam still be worth $3 billion after everybody said it was a scam. And so I started doing a deeper dive and I started finding out the power of blockchain. So this idea that you could hold an asset that nobody else could control, that I could transfer money to other people, that nobody could block it. There was no trusted third party. And when I realized that, Jordan, I realized that this was a $1 trillion idea. And so I went to my publisher that publishes my newsletter, Palm Beach Confidential and the Palm Beach Letter. And I said, look, I am going to write about crypto. I'm going to recommend Bitcoin. I'm going to recommend Ethereum. At the time,
they probably thought you were crazy.
They thought I was insane. They said to me point blank, if you want to work with us and have us publish your letter, you cannot write about crypto. And I said, you know what? I will leave and I'll start up my own newsletter. I'm writing about crypto. And of course, they blinked.
I'll tell you a story. You're going to love this. So in 2000, you're going to die. In 2011, I get this email from a friend of mine from Australia who's like kind of tech savvy. He's like, buddy, there's this new thing out there called Bitcoin. I had heard about it, but I heard about it from the perspective of Silk Road.
Right.
And he goes, listen, if you just give me $100,000, I could start a mining operation for you, and you could be one of the biggest miners out there, and I'm telling you, this is going to be the biggest thing. And I looked at it, and I said, I think it will be, but I'm the wrong guy for it. In other words, you have to know your brand.
Sure.
So I think for me, given my background, to me to get involved in the fact that everyone's calling it a scam, I was not the right person to be blazing the trail for Bitcoin. If anything, I would take away from it, right?
Right.
It took me many years till once it was considered more, then I could say, okay, well, because, again, like it's at a certain point in the beginning where, like, and you said it right, everyone was saying scam alert,
correct.
Scam alert. What was it though, besides the fact that you said, okay, it crashed and was worth $3 billion? Good point. Because, listen, guys, when you're involved in the stock market and you're investing in companies and the stock turns out to be a scam, it doesn't crash and worth 50 million. Or 30 million, or 10 million, or $1 million. It goes to zero. And that's the whole, it just evaporates and becomes a shell and that gets repurposed.
Right.
So it's an interesting perspective that you said, you looked at this thing, it crashed, the whole world says it's over, it's a scam, it's worth $3 billion. Disconnect, right? Then you said, that just caused you to do a deeper dive into the tech.
Correct.
What was it? Can you explain to me? I think people have a very difficult time really understanding what blockchain technology is. Can you explain it in very simple layman's terms?
Yes, blockchain technology is simply a highly secure Excel spreadsheet that everybody else can look at. It's open. Anybody can make new entries into it. But before a new entry can be made into this spreadsheet, everybody has to agree that that entry makes sense. So I'll give you an example.
It's like Wikipedia almost, in a sense, like a bad form, a highly secure form of Wikipedia.
In a sense, but it's self-regulating. So here's what I mean. Let's say I have 4 Bitcoin and you have 2 Bitcoin, and I want to send you 6 Bitcoin. Well, I don't have 6 Bitcoin to send you. I only have 4 Bitcoin to send you. In the modern world, I can hack a computer like a bank and say, oh, Teeka has $6 instead of $4 and send that out. Now, let's say you try to do that with a blockchain. There are maybe 10,000 computers that all have an identical copy of this ledger, of this Excel spreadsheet. Let's say I manage to hack into one of them and say, oh no, Teeka doesn't have 4 Bitcoin, he has 6 Bitcoin. Okay, so I've controlled that node. And now I say, send 6 Bitcoin to Jordan. Before that Bitcoin will be sent, that node will ask every other node in the network, hey, Teeka's trying to send 6 Bitcoin. My copy of the ledger says he has it. What does your copy say? And then the other computer says, well, no, my copy says he only has 4 Bitcoin. And then they ask the next computer and the next computer and the next computer. And then they ask, once you get to 51% of the other nodes, say, no, Teeka doesn't have 6 Bitcoin, he has 4 Bitcoin. It automatically rejects the transaction. So you cannot fool it. And the only way to fool it is to take control of 51% of the network within a 10-minute period of time, which on the Bitcoin blockchain is physically impossible. You need something like $13 billion worth of energy, you'd need $3 billion worth of hardware, and you'd need to be able to do the hack within a 10-minute time frame, because that's how long each block of information is before it goes to the next block of information, which makes it, for all practical purposes, completely hack-proof. And when I understood that here was a way to keep track of value. Here was a way that you could move value around the world without trusting a third party, without having the fear that somebody else could tamper with it, without the fear of somebody could create more Bitcoin out of thin air. I knew that would be worth trillions.
Has that ever happened? Has it ever happened once where someone created more Bitcoin? Has it ever happened?
There's never been a double spend on the Bitcoin network.
Has there ever been a hack on the Bitcoin? Because you hear about hacks all the time, hacks on exchanges. So I think like when we think of Bitcoin, the average layperson, you think of, wait a second, every week I hear about someone that got hacked and the exchange went out of business and everyone lost their money and they made off with the Bitcoin and this and that. And I think what you're saying is that there's, without saying it, there's 2 types of investments or 2 types of models. There's the centralized model,
right, which
is what you see people getting hacked, where you don't actually own your Bitcoin.
Correct.
They're taking all of that off, putting it back into a centralized exchange. So now it looks just like fiat money. So it's really off the blockchain, right? You don't own your crypto anymore. And then from when it's there, it's vulnerable. But once it goes back on the blockchain, it's not vulnerable.
Well, they're on the blockchain. The coins never leave the blockchain. But think of it like this. Think of it, if you have a password, your password, if you keep it in your custody, right? As long as nobody breaks in or knows where you have it, they can't take it.
So you're giving custody of your Bitcoin. You're still on the blockchain, but you're giving custody over to the
somebody
exchange.
else. Right.
And once it's there, if they get hacked,
correct,
then you could lose your money.
That's
so what's happening with these exchanges, people are, without really knowing it, they go to a Coinbase or they go to a Mt. Gox in the early days,
yes,
and they still own their Bitcoin theoretically, but they've given custody over to Mt. Gox. So on the blockchains, who would be the owner of record, Mt. Gox or them?
It's Mt. Gox is the owner of record, and Mt. Gox did a bad job of keeping their passwords safe. And so they got hacked, somebody found their private keys and was able to steal all the Bitcoin.
Just, for those who don't know, Mt. Gox is an exchange back 2013,
14, yeah.
They got hacked. and everyone lost their money. 600, was it?
Billions of dollars.
Billions of
worth.
dollars. It was
Yeah.
recently 600 million.
Yeah.
So, for example, yesterday or 2 days ago, we hear about a big 600 million plus.
Okay, so
they
that's
returned
something
a couple
different.
hundred million. I heard this morning.
They did. So that's something different. So that's on the Ethereum network. There are things called smart contracts. Okay, so what's a smart contract? So a smart contract is literally a series of instructions in a program that allow the program to act autonomously, meaning that nobody owns it or runs the program. Now, those things have to be programmed incredibly well because very smart people can create new programs that interact with that program that fool the program to think something else. And then they create that vulnerability and they can steal money from the program. They're not stealing it off the blockchain. They're not hacking into Ethereum and changing the blockchain in order to steal the money. So think about it like, let's say you have the Apple iOS system, right? Mm-hmm. And let's say the Apple iOS system is hack-proof, which it isn't. But then you have a program that runs on iOS. And somebody goes in and they hack that program that runs on iOS. It's different from the operating system. It's a program that runs on the operating system. So a smart contract is a program that runs typically on the Ethereum operating system.
So getting back to your original thesis here, so you're saying that Bitcoin is hack-proof.
At this point in time, nobody has access to enough power and enough hash power to violate the Bitcoin network.
What would happen if a quantum computer or something like that, and a highly advanced computer came out and was able to harness enough, whatever it would be, I guess, computing power? Could that completely wipe the whole thing out?
So I always look at economic incentives. So let's say you have the power to break the encryption on the Bitcoin network. Let's say that for a second you have that. You have a lot of choices of what to do with that power. So you think about what happens if you break the sanctity of the blockchain network. What happens to the value of a Bitcoin?
It depends what you do with that power.
No, well, let's say again, you've hacked the
value,
network and you've stolen Bitcoin.
Okay, logically, if someone, let's just say the NSA decide, you know what, enough of Bitcoin, they want to shut it down. Although maybe it's the NSA is Satoshi, who knows? Okay, who knows? I had this theory that it was actually the NSA, it was the U.S. government is Satoshi, but that's a separate issue. All right, but if the government, let's say a central government decided, like North Korea, as a bad actor, wanted to just destroy and wreak havoc financially, they hacked into the system, were able to do that. The loss of confidence would be so severe, Bitcoin would effectively become worthless as a store of value.
It would be devastating. But think about this. Let's talk about that rogue actor, North Korea. If you really wanted to hurt the United States and you had the power of quantum computing, why would you go after something small like Bitcoin? Wouldn't you go after the stock market, the capital markets, the bond market, the actual underpinnings of our entire capitalist system? So you take down Bitcoin, it's $1 trillion, big deal. What about the bond market? It's over $100 trillion. What about the equity market? It's over $100 trillion. What about the global financial system? If you can crack SHA-256 encryption, you can crack any encryption in the world. You could steal $1 trillion from the Federal Reserve. You could print your own money from the Federal Reserve and steal it.
Right. So, but the idea, I think, would be, to play devil's advocate, would be that, let's say you had the ability to crack it, you would take it and you wouldn't destroy it, but you would start siphoning off money slowly but surely, or enough of a big chunk to not destroy it, but to basically make a big score, and that would undermine not destroy it, because then if you wanted to just make money, you know what I'm saying?
My point.
You know what I'm trying to say?
I do. But
a government that wanted to literally decide that, you know what, like China, we don't like Bitcoin. China obviously does not like Bitcoin.
Sure.
They don't like it for whatever reason. They have their reasons why they don't like Bitcoin. I can see why they would not like it. Okay, so let's say China had the ability to say, you know what, no, we're going to destroy it because we're destroying Bitcoin. This is how we're going to do it. We're going to destroy it. And the NSA says, we don't really like it either because it's undermining sovereign wealth and their ability to control monetary policy. So let's get together both. Let's destroy this, and that's that.
Here's why I think that doesn't happen. One, we can't even get together to stop global drugs. We can't even get together to stop arms dealing. The fact that we're going to get together in pursuit against Bitcoin, I think is a very, very low probability event.
Well, me too. I'm long Bitcoin. You see, I don't think this is happening.
No.
I'm just playing devil's advocate.
I know.
I'm trying to understand it.
But I'm trying to give everybody the mental framework for how big governments think. And Bitcoin, yeah, might be annoying, but at $1 trillion, it's still a pimple on an elephant's ass. It's still tiny. And the other thing is that I want everybody watching here to remember is that the Bitcoin network can change the way the algorithm, the crypto algorithm works. So it's resistant to quantum computing. The other thing that everybody needs to know is we are decades away from a quantum computer being able to break this type of encryption. And again, if they are able to break that type of encryption, I wouldn't be so much worried about Bitcoin. I'd be worried about the stock market. I'd be worried about the money in the banking system. I'd be worried about global trade. Those are the things that I'd be more concerned about.
I think that, in truth, if the U.S. government really wanted to stop it, they could massively destroy it by legislation. They could, in the 30s, they made it illegal to own gold. They could, if they really wanted to. I don't think this is going to happen, I'm just saying, but I think that they wouldn't need a quantum computer to destroy Bitcoin. If they truly wanted to destroy it, they'd pass legislation. It is illegal to own Bitcoin. They say it is literally illegal, as they did in the 30s with gold. It's illegal, and that would obviously have a massive impact on the price in the United States, right? I don't think it's going to happen, which is why I'm long. I just wanted to discuss this whole idea, because originally I did think that was going to happen.
Yeah.
You never thought, in the early days, you never worried about that?
I worried about it in the very early days, which is why I always told people, take a small position, because if we're right, you're going to make 100, 200 times your money. And when you have that type of upside, you don't need to bet the farm, right? Just a few $1,000s can move the needle on the average person's life.
So let's get off that topic, because I had to talk about it, because without...
No. But I just want to say one last thing about that. I know there's a lot of fear that, governments are going to collude against Bitcoin. The U.S. government hates Bitcoin. If that was true, right? If that was true, why would the Office of the Comptroller of the Currency, the most powerful regulatory agency in the United States that governs all banks, come out with regulations that says that any bank in America can now custody a cryptocurrency? Any bank in America can provide financial services to any registered cryptocurrency business in America. Why would you see J.P. Morgan, Goldman Sachs, Citigroup, Morgan Stanley, Neuberger Berman, PNC Bank all come out and say, we're offering Bitcoin to our clients?
I don't think, I don't think that is a bullish, honestly. Like, Goldman Sachs getting involved in something, at least in the short term, does not, to me, mean that it's not bullish for the price. Like,
I think it's wildly bullish. You know why?
Yeah.
Because it's a story of adoption. There's only ever going to be 21 million coins.
Let me take the other position here. That if I go back in history and look, when I think that just because Goldman Sachs is offering it to their clients, that just means they think they can make money trading it.
Absolutely.
It's not bullish for the price up or down, because Goldman Sachs says they were offering CDOs to their client. They were the people convinced. They were the ones creating all of the credit default swaps and the CDOs, which literally almost destroyed the world economy. And all they care about is that they can manufacture and make money trading.
Here's the difference. There's only maybe 13 million Bitcoin actively out there in the float. Right? So you've got to look at the adoption curve. There's only 200 million people use Bitcoin. So if you get now, let's say 1 billion people using Bitcoin, and you've got trading firms using Bitcoin, they all have to have a position in Bitcoin, even if they're just trading against it, long and short. So you're taking supply out of the market. That's the difference here, Jordan. It's a finite resource, unlike any other financial asset you or I may have been involved with. CDOs, you could print them all day long, right? Fiat currency, you can print them all day long. Stock, you can issue all day long. You cannot do that with Bitcoin. And so that's why it's wildly bullish that these guys are coming in.
So let's say, when you say using, that's a term for Bitcoin that's kind of interesting. Like, it's not like its use cases are not like really about payments and monetary. I think it's much safer the story to be a store of value than as a currency. I think it's a very poor currency and a much better store of value.
I do. I think it's a store of value and it's a speculative asset.
Right. I don't look at it as something that you use, like as money, and that it's something that's ever going to be used to go buy a pizza or
I think it's a mistake.
Coffee.
We talked about this offline about like 10 years ago. Would you use Apple stock to go buy a cup of coffee?
It doesn't make sense.
It doesn't make any sense.
Right.
Yes.
So in other words, like when we talk about using Bitcoin, it's really what you're saying is that if these large investment banks are allowing their people to buy it, you're saying that just creates more buyers, more demand for it.
For a finite resource.
For a
that
finite
you
resource.
cannot make more of. There's never been an asset in human history that was as finite as Bitcoin, that was as pure as Bitcoin, that was unassailable as Bitcoin. It's never existed, Jordan. And that's why people have a hard time getting their head around it.
All right, listen, this is a message from my favorite sponsor, NetSuite, an awesome company, part of Oracle, Larry Ellison, a legend. They're the best, right? So here's the deal. If you're a business owner, you don't need them to tell you that running a business is a tough thing to do, right? But you might be making it a lot harder on yourself than you have to be. Don't let QuickBooks and spreadsheets slow you down anymore. It's time to upgrade to NetSuite. Time to stop paying for multiple systems that don't give you even close to the amount of information you truly need to run your business the right way. Ditch the spreadsheets, all that old software you've outgrown. Now is the time to upgrade to NetSuite by Oracle, the world's #1 cloud business system. NetSuite gives you the visibility, the control over your financials that you need, your HR, your inventory, e-commerce, and more. Everything all in one spot, instantaneously. Whether you're doing $1 million or hundreds of millions in revenue a year, you can save a ton of time and a ton of money with NetSuite. You want to join over 24,000 companies who are using NetSuite right now. Let them show you how they'll benefit your business with a free product tour at netsuite.com/wolf. Schedule a free product tour now at netsuite.com/wolf. That's netsuite.com/wolf. All right, want to grow your business, diversify your content? You're not going to find a better tool out there than Melon for your live streaming needs. Blazing fast response time, low CPU usage, all available right in your browser. Go to melonapp.com/wolf and start streaming today. What's the other side? You're so wildly bullish on this.
Wildly bullish.
What's the other? You have no reservations at all. It's just 100%. It's going to the moon.
Correct. Now, will it go up in a straight line? No. Since I recommended it at $400 back in 2016, we've been down 84%, 64%, 40%, just recently 53%. And so what I've told my readers in my newsletters is, look, this will be the most volatile investment you ever own. There'll be mornings when you come in when you're down 50% and feel like vomiting all over your keyboard. What do? Turn the goddamn computer off and go enjoy your life. And if you can just be patient, this asset will do more for you and more for your financial life than any other asset you could buy in the world right now. There is no asset
so even at
that can change your life.
45,000, you still think this is by far the greatest investment for anybody to get involved in?
Absolutely, 100%.
You would look at that above any other coin or car, any that. So
there's no
Ethereum, Matic, anything else, nothing, just
nothing
Bitcoin.
There's no asset that has the lowest risk, highest reward profile that this asset has. If you have a 5-year hold period, you will make money. I think within 5 years, Bitcoin's worth $500,000. That's like a 50% compound annual rate of return between now and the next 5 years. Show me any other asset that you think can do that.
And why do you think it goes to $500,000?
Purely based on adoption. We're going to go from, when you go from 200 million users to 2 billion users, which we will over the next 5 years, and you have a finite resource, there's only 13 or 14 million of them. It's just supply and demand. You could have an IQ of 70 and still be smart enough to make a fortune on Bitcoin. That's all you got to know, is that it's going to go from a small market to a big market. That's it.
And you see no possibility in anywhere for that to be a massive, that you don't think this is possible to kill. It's definitely there.
We have passed, we've crossed the Rubicon, we are past the event horizon. It will not be killed. Now, will we have volatility? Yes. I guarantee you, if you buy Bitcoin today, at some point over the next 5 years, you're going to be down 50 or 60% multiple times. It's just the nature of the beast.
So you have to have a very long, your idea is buy it and hold it.
Yeah, 5 years. Look, the 5 years is going to go by regardless of what you do, okay? No one can stop time. So just put yourself in a position to let time do the heavy lifting for you. And the pristine asset you want to own is Bitcoin.
And what would you say to someone like Warren Buffett, who says that Bitcoin is rat poison squared?
Well, Bill Miller says something really great about this. He says if cash is the rat, then Warren's absolutely right, because this is rat poison for the fiat system, because it's a non-fiat, it's a fiat killer. Now, is it a fiat killer now? No, but it's a fiat killer in 20 years from now, probably. I think this is a check against unmitigated government printing of fiat currency, because what will happen is, in the past, when central banks would print too much money, everybody would flee to gold. Well, gold really doesn't work that way anymore, because we're in a digital world. So as we pull back the camera 20 years from now, when governments print too much cash, where are they going to go to? People are going to go to Bitcoin. And so that will act as a check against reckless money printing. Not now, but in the future. That's something that I foresee of one of Bitcoin's primary roles will keep the world's central banks in line.
Do you look at this? See, the problem I have with this, and listen, just you know I'm a bull.
You are, yes. But I like that you're taking the other side.
I want to make, I think it's really interesting because you're so passionate about it. I am too. And I'm buying it every day, buy more, okay? So I want to be clear. I'm not trying to debunk this or say it's bad. I'm not telling you what to do. I own a lot of it. I keep buying more. But I love to speak to someone who's very educated about it, and I want to shoot more holes in it, because by shooting holes in something, you get to more of the truth of why something is either good or bad, right?
Sure.
If you challenge someone, they get defensive and flip out, then they don't really know their shit, right? So, for example, when you say, okay, so it will hold central banks in check, like, to me, that sounds dangerous. Like, that's where I see the government saying, no, I'm sorry, I'm not going to have a bunch of people around the world, many of them under the age of 30, tell me how to run my fucking country. Like, seriously. So, like, to me, that seems like the reasons why I was originally very, very negative on Bitcoin and bullish on blockchain. So I always loved blockchain. I always thought that was great. I thought there'd be a lot of different use cases. What scared the shit out of me with Bitcoin was simply sovereign risk.
Sure.
Because I was saying, why on earth would the governments allow something out there that would, potentially erode their ability to control monetary policy? Because monetary, the old famous Rothschild saying, I don't care who runs the company, give me control of the money supply, I run the country,
Correct.
right? So why would a sovereign allow there to be an independent check? How could they benefit from that? It would seem they want to stop that at all costs. That was my first thing. Second thing was money laundering. I know I got in trouble not for stocks, for money laundering. I smuggled money to Switzerland. I remember how apeshit crazy the government went. You remember in the 2000s,
Sure.
They did everything to try to shut Switzerland down, to get all this stuff just to make it impossible to do business, to the point I don't think a U.S. citizen could even open up a Swiss bank account anymore. It's impossible, right?
Yeah.
Why would they allow Bitcoin? It seems it's just like, so all that, and go ahead, just use this instead.
Okay, so
those are my original big red flags.
Let's talk about money laundering first. You have to be a special kind of stupid to use Bitcoin to launder money. Like, seriously. Like, you have to have a big D for dumbass on your head to use Bitcoin. Why? Because it's a public blockchain. It's a public ledger. They see everything. They only have to tie you to one transaction to untie every transaction you ever did on the blockchain network.
Before you go further, let me ask you this. In some way, is Bitcoin a euphemism for cryptocurrency? Because there's other cryptocurrencies that are good for money laundering, aren't there? They were designed for it. So, like, when you say, I think maybe what's happening is when you say Bitcoin, people are using it for crypto. In other words, so while Bitcoin might not be well suited for that at all, you're right, because it's transparent, there are others that are like privacy coins, where things are purposely being jumbled and tornadoed around to make it very, very difficult.
But let me put that in perspective.
Sure.
In the cash market, over $5 trillion a year is laundered. You think that happens without the banks participating in it? HSBC came out and they had to plead guilty because they were helping the goddamn Mexican drug cartels launder billions of dollars.
I know.
If you look at the amount of money laundering that happens on the Bitcoin blockchain, yes, in the early days, there was a lot. Maybe 30 or 40% was used for criminal purposes.
Well, like in the early days of the internet, it was pornography.
Correct.
Of course, right.
Now it's less than 1%.
Okay.
Less than 1% because the criminals are getting smart. They realize, wow, we get tied to one transaction, we're done. Let's use cash. Cash is untraceable. Right. Cash is the ultimate bearer asset if you want to commit crimes.
Okay.
If you look at this recent ransom event that took place here in the United States, they got all the cash back because the idiots took the money in Bitcoin.
Right.
I mean, take it in a privacy coin like Monero. Why are you taking it in Bitcoin?
All right, so number two, the whole Rothschild comparison, giving away control of the money supply.
Okay, so I've spoken to a lot of bankers in the United States, Federal Reserve bankers, and their thinking on Bitcoin and they're making a huge mistake. They're like, oh, this is really, just kind of weird and just a bunch of idiot kids and it's just a fad and it'll go away.
But the genie's out of the bottle now.
Now the genie's out of the bottle.
So is it too late?
It's too late. It's $1 trillion asset. You can't put it back in the bottle now.
In retrospect, do you think if they could, they would?
They could. In 2011, they could have killed it. And in 2013, they could have killed it.
If they would have known what they know now, you think they would have killed it?
100%.
Okay.
100%. I agree. 100%. That was always a risk.
That was my biggest.
There was always a risk, and I always talked about it. But look, when Bitcoin was at $400, if you put $5,000 into it,
right?
No,
I agree.
And you bought 12 Bitcoin. You're sitting on over $500,000 right now.
Right. I agree, which is why I'm wrong. So now let's stop with that line of thinking now, because I think everyone kind of gets that, right? There are risks, as he said, right? It looks to be, you never know, because suddenly all the governments could gang up, who knows? But I think the chances are far better than not that the genie's out of the bottle, and it's just going to be about extreme regulation of the on-ramps and off-ramps into the fiat currency world. Do you agree with that?
I agree with that. There's going to be a lot of know your customer rules, anti-money laundering, which I got no problem with.
Well, to me, I'm even more in that school. I believe, because when you've been around long enough, you see these things happen every 10 years. There's some new market. It's a dark market. I mean, there's no real reporting. Trades happen by appointment, and they get all nervous. Oh, my God, the government's going to regulate it. Yet every time the government regulates it, the asset class goes wild, goes much. So I think the biggest bullish indicator for Bitcoin, I don't even look at the ban. I'm saying just that regulation comes into it. I think that's big. Maybe it'll cause a short-term dip, but I think long-term, that's the best thing that can happen.
Because it allows much bigger pools of capital to come into the market. It allows regulated pools of capital into the market. And whether everybody likes to admit it or not, regulated pools of capital is what's going to take Bitcoin to $500,000. Do
you think it's dangerous still to hold your Bitcoin on an exchange? Should you hold it on the blockchain itself in a decentralized wild card storage?
I'm a big believer in that you should self-custody. Now, look, if you're the person that loses your keys all the time, you leave your wallet everywhere and your glasses, you've gone through 20 pairs of sunglasses in a year, you should not self-custody your Bitcoin, okay? But use an exchange that is well-respected, that's well-capitalized, like Coinbase or Gemini or Kraken. Those are generally safe places to keep your coins. But otherwise, I'm a big believer in self-custody.
All right, so let's go through the difference now between Bitcoin and Ethereum.
Okay.
Why don't you explain that to everybody?
Sure. So it's the fundamental difference between a block of gold, right, which is Bitcoin, kind of a store of value, and Microsoft, which made a platform that everybody else developed on. So think of Ethereum like MS-DOS, the Microsoft operating system, right? That was on enabled the entire PC era. Mm-hmm. And Microsoft basically gave an operating system that other people could build programs on.
Would you say that almost like that Android's a great example of that?
Android
even better, maybe?
That's an even better example. So think of Ethereum as an operating system that allows people to build programs that run on a blockchain. And so those are called dApps, decentralized applications. And so
protocols, right?
Yeah. Well, no, not protocols.
What are protocols? What's the difference?
So Ethereum is a protocol. Ethereum is a layer 1 protocol that other people build on. Bitcoin is a layer 1 protocol.
So protocols is a coin, is a security. It's a
not
way of
so much
saying it's not a security. Is it really just a clever way of getting around that it's a security?
No, I don't think so. I think a protocol is an underlying technology that is fundamental to other technologies. So TCP/IP is a protocol that is fundamental to the internet. Everybody built other applications that ran on TCP/IP.
That's what you see when you try to go on your airplane, internet, right? So basically what happens is I always see this thing TCP. What is
Right,
that exactly?
TCP/IP. So what it is, it was a uniform way for computers to talk to each other. And so it was a uniform language that allowed networked computers
Got it.
that was the backbone for the internet.
Okay, got
And
it.
so Ethereum is a uniform way for different types of programs to talk to each other on the Ethereum blockchain.
Okay, so are you bullish on Ethereum? Is it
Wildly bullish on Ethereum for
current
different
price?
reasons.
Where is it? 3,000? What does it say? 3,000 what?
3K. I started recommending Ethereum at $9.
Okay.
And people thought I was insane.
Okay.
Insane, because it had just come from 30 cents less than a year before. They're like, why? How can you recommend this at 9? And in my report, I said it would be worth at least 350, and within a year, it was worth 1,400.
Right.
So
it's 3,000 now. If you had to give a end of year price target, is that too soon for you?
no,
Do you-
I think this year it has a good shot at going to 10K
before the end of the year.
before the end.
Why?
By the end of the year.
Why?
I think usage is the same thing. It continues to be the most widely used blockchain in the world in terms of actual product being built on top of it, actual value being built on top of it. And I think as more institutions come in, they're going to realize and say, my God, this is like buying Microsoft in 1986, right? Or 1987. These guys are going to be the linchpin for this whole new world of internet infrastructure, of internet development, which is what I said back in 2016, and it's coming true now. Long term, what do I think Ethereum's worth? Probably $40,000 a coin.
Do you think that some people say that Ethereum kind of sucks?
It does suck, but Microsoft sucked. Do you remember the blue screen of death in Windows 95? It was the crappiest piece of software that ever shipped, and they sold billions of it. What I've learned, Jordan, it's not the best technology that wins. It's the most widely used technology that's most adopted by developers. And Ethereum is the most widely adopted technology in the space. Has something like 200,000 developers on it. The closest second has maybe 2,000.
And which is?
There's a Binance chain and Cardano and stuff like that has a bunch of Solana has a bunch of other developers on it. And that's not to say those coins don't have value. We own them. We made a lot of money in them in my newsletter. But in terms of you asking me who's going to be the winner, I mean, it's clearly Ethereum. Ethereum is just demolishing everybody on every statistic that matters, from usage, from value that's been created on it, from the amount of developers that are on it, from the amount of network volume that's on it, from the amount of physical dollars that get transacted on it every day. It's the biggest, most important market in the world outside of traditional finance.
What are the biggest problems with Ethereum?
It's slow as hell.
And expensive?
It's very expensive. The Solidity is a very difficult language to program in. It's very easy to write buggy code, and if you write buggy code on your programs, they can get hacked or they can get fooled, they can get exploited. There's huge problems in it. But I remember in 1994, I was pitching an internet deal to a lawyer in London, and he goes online and he looks at it and he goes, this is ridiculous. It's so slow. People are just putting up pictures of their cats. This internet thing is stupid. It's never going to go anywhere. And it's the same thing I've seen now with crypto. Right. But the deal did very well. It was actually a web development company.
I'll tell you a great story. So back in, even before that, 1997, my ex-wife, the one from the movie, right, was played by Margot Robbie. We were out. Our kids went to this really high-end private school called Friends Academy, and they had like a gathering of all the parents, whatever. And I didn't attend that. I was traveling, right? And in that group was a guy. His name was Sanjay Kumar. He He actually went to jail he got in huge trouble he was the CEO of Computer Associates. Remember that whole
Remember
thing?
the CA, yeah.
They were the 31-day month. He got in trouble for accounting fraud, but kind of overbilling each month to make the numbers look better, right? Anyway, but they were an early mainframe computer supporter, right? This was back in the olden days when there were mainframes, right? And my ex was starting a business in like maternity clothes, and she comes back. She goes, I spoke to Sanjay, and Sanjay says I need to have a website. I'm like, what a fucking idiot this guy is. I'm like, what do you need a web? No one, who's going to do something? Stop. Just focus on, you want to open a store, open up a store. Who then needs a stupid website? Just don't waste your time.
Yeah, see?
Right?
Yeah.
And by the way, most people would say back then, yeah, of course, why would you want a website, right? So it's really interesting how, at certain times, it's just like, I wouldn't say that I'm not a visionary, because in some ways I am, but sometimes I do with technology. I get a little bit cubbyhole myself when I find things they don't sort of make sense to me, in the sense that when I looked at the internet, the issue was it was so slow.
So slow, yeah.
It was so slow that every time I got on, it was like, it's just more trouble than it's worth. I remember that. Right. With
I remember all of that.
Modems, the
AOL.
AK modems, right? With the AOL, right? So if you look at Bitcoin right now and Ethereum, in a 9-inning game, where are we?
Bottom of the second inning.
Bottom of the second inning.
Yeah.
Got it. And do you think that there is going to be any sort of near-term events that could something you could see right now on your radar that might shock the market in the short term, lower or higher? Like, either way, like something that could really happen a moment in time. What could happen that would shock it higher or shock it lower?
Well, we just saw just now, we just have dealt with a 53% drop in Bitcoin and a 60% drop in the altcoins when China came out and banned mining.
And was that strictly because China banned mining?
I think it was two things. One, the market was a little bit ahead of itself. I mean, we went like up 600% on Bitcoin. Anytime, anytime an asset goes up that fast, it's got to take a breather. People take money off the table. So we needed to do that. But yes, losing 50% of your miners on the network, yeah, it's a big deal. So it made sense that we had that drop off. In terms of what's that next shot going forward, I don't have a crystal ball, Jordan. I don't know. And what I've learned is that I'll drive myself crazy if I try to figure that out. And I found that I've made more money and had more restful nights by just focusing on the long term. And I try to keep it simple, KISS, right? Keep it simple, stupid. There's 200 million people in the space right now. I think there'll be at least 2 billion over the next 5 years. And I just focused on that. And I just focused on that trend of adoption. And if that trend of adoption is going up, then it's confirming that I'm right. If the trend of adoption goes down, then that forces me to take a look at what I'm doing. Is my thesis still correct? And all through these ups and downs, the adoption rate has continued to rise. How many assets do you know that can drop 70, 80% and more people flock to it? Like, that's the power. That's what you got to look at. The price is the least important thing. How many people are coming into this asset? Think about that. You see this massive growth in the amount of people buying the asset, even as it drops 70, 80%. You're seeing a doubling, a tripling, a quadrupling of the amount of wallets, the amount of activity, even as the price comes down.
Hey guys, today I want to tell you about United Recovery Project. Listen, United Recovery Project is a unique and intensive program for individuals who are seeking help for their substance addiction. They work with most major health insurance plans and providers to help cover the costs of your addiction treatment. So if you or one of your loved ones is suffering from substance addiction, please reach out to United Recovery Project for a free and confidential evaluation. Help is right around the corner. They also created an amazing podcast called Hell Has an Exit that shares the crazy, beautiful, raw, and vulnerable stories from individuals who've come back from battling substance abuse, addiction, gangs, even survival stories from the Holocaust. Make sure to subscribe to Hell Has an Exit podcast on your favorite podcast player, and be sure to check out their episode with me to hear amazing stories that I don't share anywhere else. You can't miss it. The Hell Has an Exit podcast by United Recovery Project is a can't miss. make sure to let them know in the comments that JB sent you.
All right, the stage is set for the biggest boxing match of the year. Tyson Fury versus Deontay Wilder. Last time these Titans squared off, Tyson, aka the Gypsy King, won by knockout. So it's definitely worth a look at MyBookie and see what happens next. Head to mybookie.ag. Now it's like Wilder versus Fury 3. Choose from a variety of bets. You have the best chance at winning and walk away with some big money. And use my promo code Belfort, capital BELFORT. Claim your double deposit bonus today at MyBookie. Again, that's promo code Belfort. You can double your funds, which means doubling your winnings. Bet anything, anytime, anywhere with MyBookie. Do it.
On the flip side of that, though, you could also say that the more in the typical pyramid scheme, the more people that get in, the harder it is to go to the next level up. So you get to a certain point. Now listen, let's talk about that, because that was another thing that really bothered me about Bitcoin. So if you're only saying that the only way this thing goes up is because more people are getting involved, at a certain point you reach the maximum of people that want to get involved, then it's all downhill from there.
I disagree 100%, because what's different here is that this is a finite asset. Do you know that something like 67% of people that own their Bitcoin never sell it? They don't move it. They just leave it alone. Tudor Jones came out and he talked about how when Bitcoin went from 20K to 4K, something like 67% of the Bitcoin never moved.
Right, but I understand, but I'm talking about something different. I'm talking about psychology of that when for something to have an increased value is strictly on more people saying it's worth money.
Well, that's true for gold.
Which is why there's always
the difference with gold is that you always have 2 to 4% new gold coming out every single year. So over a 10-year period, you've got 20 to 40% more gold, more supply, which always acts as a cap on gold. But with Bitcoin, we know what the new supply is going to be. The last Bitcoin will be mined in like 120, 140 years. So that's the difference. It's a finite asset.
No, I understand that, but I'm talking about something different. I'm talking about is that for an asset, if it's all based on like just more people, then there's a limit to how many people will get involved. What happens when all the people are going to adopt? Then is the next step they all got to keep buying more?
No, because I do see what you're saying. No, what I'm saying is that, and I should have made this clear. Over time, new use cases will occur.
That's a different story.
For Bitcoin.
Okay, so that's now a different story.
So it was the same thing with the internet. People would say, well, how can you pay for all this for Amazon? How can you do this? How can you do that? Well, the only use case we had for the internet in the early days was porn and cat videos. That was it. Right?
It was pretty good.
Right? That was the only.
It's like having a Playboy under your, like, I mean, when we were kids, like, you had to, like, run and hide. Like,
but my point is, like, nobody could think that we'd have a Facebook, we'd have a Netflix,
correct.
We'd have different types of Google.
This is what I want to kind of drag out of you.
Yes.
So I'm saying, I don't think
new use cases will develop.
You can't just look at it as user adoption. I think it's got to be beyond. One case is certainly important, right? But to really... Don't you think to really make it sustainable, does it need to have use cases or not?
Okay, I look at things A to Z. That's a back of the alphabet problem.
That's very low down.
I'm just saying that's you're talking 5-10 years out. Those use cases will develop. What I'm saying is you don't need to worry about any of that right now. Just the money that you will make going from 200 million users to 2 billion users over the next 5 years, you can just focus on that. And if that's all you do in Bitcoin, you'll make a fortune.
Can I ask you a different question?
Yes.
Isn't it okay if it doesn't go up 10 times? Like, isn't it an asset, a great asset that just appreciates slowly over time and holds its value?
But that's not Bitcoin.
I understand, but what I'm saying is, I guess on some level, here's what bothered me about some of the story on Bitcoin, that it's like in the classic pump and dump scheme, right? In the classic ultra risky shit asset that has no real value, you have to say it's going up 10 times because the suckers are not getting in it to go. Like if it's going up 12% a year, why the hell should I buy it? The only way you could make people want to buy something is by saying it's going up 500%. So like, and then in the early days, I thought there was a lot of that going around. In 2017, I said that it's ridiculous. It was 20,000. This thing is going down. It's shit. It's going to go to zero. I was right and wrong. And I told you I was right that crazy at 20,000 based on how quickly it ran up. I was wrong, as you said. It didn't, when it crashed, it didn't go to zero.
Correct.
It got value.
Yes.
My point is that, like, when I looked at it, it's like, why does it have to be that it's like going up 1,000%?
That's the nature of assets in their early stage. If you look at Microsoft, if you look at Amazon, if you look at Apple,
Early adopters,
those moves were humongous, right? They were huge moves. I don't make the rules of how asset growth works. I'm smart enough to understand how they work. For instance, when we got involved in Bitcoin at $400, I mean, it's up over 100x, right, since then. Again, that's just the nature of how adoption works.
So you still look. Okay, let's look at the comparison. Microsoft, I remember it was $4 a share, right? Plus, also was getting through a zillion splits, by the way, right?
Yes.
So the question is, with Bitcoin right now, right, at 45,000.
Yes.
You think it's got a 10x from here, right?
Correct.
Do you think it's got a 10x from 500,000? Or no, then you're more of an established. Is there some point? My question is: there some point in time where you would say, "No, all right, it's kind of mature now. It's a regular, stable asset class that's not going to keep going up to infinity, or is it an infinity?"
No,
right?
It's not an infinity. I think you've got to look at the use.
You see my point?
No, I see your point. So you got to look at the use case. I'm a big believer in the front of the alphabet problems and back of the alphabet problems, right? So front of the alphabet problems is, okay, what's the model that takes this thing higher? Well, the first model is user adoption. The second, how do you go from 500,000 to 1 million or 2 million or 3 million? Well, you've got to get integrated into the real economy in some way, right? So I don't know if that's in the lending markets, somehow in the capital markets, some way that you've created Bitcoin that is now being used maybe for global trade. My point is that we don't need to figure that out yet. That's like being in 1992 and trying to come up with the idea of Facebook, which didn't come out as a public company to 2012.
Was General Magic in the like General Magic?
Right.
They invented the iPhone before there was any possibility for an iPhone. No one bought it because you couldn't use it for anything, and that's a big clunky thing because the technology wasn't there, the use case wasn't there, right?
Yes.
Well, you should watch that. You see that documentary? It's great.
No,
on General Magic.
I will check it out.
It's
you mentioned
really
it.
freaking cool. These guys they all went on to do other things after. They had this early iPhone in 1987 or 8.
Yeah.
And what could you do with it at that point?
Well, let's talk about the iPhone. When the iPhone first came out in 2007, Steve Ballmer dismissed it as a toy, and most people did. And look what that happened. Look at the user adoption of the iPhone from 2007 to 2017, and then you tack on another 5 more years, and the value that accrued to Apple shareholders was incredible. We could not know in 2007 how pivotal that device was going to be. The smartest people on the planet couldn't know how pivotal that device was going to be. And I will say the same thing is true for Bitcoin, Ethereum, and the entire crypto ecosystem. We have barely scratched the surface of how those assets and how that technology is going to impact our lives. All I know is I'm smart enough to know that it will impact our lives. It will create massive volume. How that will actually be iterated out into the world step by step, I don't have that answer, Jordan. But I don't need to have that answer in order to make millions and millions and millions of dollars from these ideas.
Do you see a time where you think that the dollar has gone bye-bye and it's all Bitcoin?
No, absolutely not. We need fiat currency. We need it.
Why?
So, because it's the easiest way to conduct transactions and conduct business.
Or does it need it for managing economies and growth and the ability to increase and decrease money supply?
Yeah,
and
absolutely,
it's a
very important mechanism. So I think Bitcoin and the dollar can work hand in hand. Also, once they go to a digital dollar, it's going to kill all these stable coins, and I think the dollar will be the funding currency of choice within the crypto network. People think that somehow a digital dollar is going to kill Bitcoin and Ethereum.
I don't think it's a digital dollar is not a cryptocurrency.
No, it's not a cryptocurrency. It's something totally different.
Exactly, and this is a really important point. So let's talk about this whole idea of cryptocurrency and a digital dollar or yuan. They're completely different animals. Can you explain that to everyone, what the difference is?
Yeah, I mean, a digital dollar is simply another fiat currency, but in a digital form. The way you move dollars around with PayPal, except this will be a universal dollar that you can use or move on any individual platform.
Anyway, right, yeah.
Yeah, and they can print as many as they want. They can block it. They can do all these types of things.
It's made for that.
Right.
For agnostic, digital dollar, digital yuan, stable coin, right?
Yes.
So your point is that a cryptocurrency is a decentralized
Correct. Nobody owns it.
tool,
Nobody runs
right,
it. You
and
can't
it's-
dilute it.
Right, and there's a set algorithm of, like, the rules, so
Correct.
to speak.
Yes.
Fiat, the rules are if the
Whatever
central
Joe Powell
bankers,
says it is.
right?
Yeah.
Well, they
Jerome-
want to, like, say we
Jerome
need
Powell.
to stimulate the economy. Let's
Yes.
increase the supply, right?
Correct.
So you see a time not where one replaces the other, where there's sort of like just sort of the dollar or the whatever, the yuan becomes the essential the methodology by which you would. No, it's okay. Commerce would still be conducted in dollars, so to speak,
correct.
right?
Yes.
But the store of value in your bank account would be in
Bitcoin.
or et al., whatever that might be.
Right. One thing that I think the Bitcoin can do is really help the global remittances market, right? So every time I want to move dollars
Yes.
and convert it into, let's say, euro, I'm getting raped by the bank.
Yeah, 100%. I hate that, by
Yeah,
the way. Can I stop
Go
here?
ahead.
It's just a great thought here. One of the biggest mistakes I've made, and I think many people make, is we tend to look at things in a very U.S.-centric
We do.
or first world-centric
Yes.
way. What about all these other countries that don't have a stable currency?
Correct.
That don't have they usually will use the dollar as a shadow currency.
Mm-hmm.
How does Bitcoin and Ethereum impact those countries? Things like you hear about El Salvador. What do you think about that?
Yeah, I think with Bitcoin, what's interesting is that they're using a second layer solution provider in Strike, so you can do very low cost Bitcoin transactions. But I don't think Bitcoin is big enough yet to be used in a dollarized economy because it's just too volatile. So I understand if you want to use Bitcoin as a funding currency. Let's say I want to send money to somebody in El Salvador, and the cheapest way for me to do it might be, okay, I send my dollars, they get converted into Bitcoin, and then on the other side, they're converted into dollars back again in El Salvador. So you use it as a funding currency, so you're not getting killed on the FX spread. I could see that, but being used as a day-to-day currency, I think Bitcoin's still too immature for that yet. I don't think it's ready.
Do you think that it's a mistake what's happening right now within El Salvador? You think it's going to end in tears?
I have to be very careful about what I say about this because you're asking me to really peer into the future.
Yeah.
I think it's a little early to put Bitcoin in that position. I think if Bitcoin was worth $10 trillion or $20 trillion and the volatility drops down to maybe 1% to 2% a day, like you would see in a typical currency, then I'd say, okay, yeah, that makes more sense. But with Bitcoin where it is now, I don't know if I would choose it as my daily currency of choice. I think Bitcoin is great as a store of value. It's great as a savings account. If you're making money in a foreign currency like in Argentina where they're just raping the currency every single year, then yeah, take your currency and convert it into Bitcoin because it's going to protect your purchasing power. But to use it as a day-to-day funding currency is, to use your example, it's like using Apple stock to buy a cup of coffee 20 years ago. It just doesn't make any sense.
When you are looking, let's change topics for a second. I want to talk to you about overall investing.
Sure.
One thing I would definitely recommend you do is you should subscribe to Teeka's newsletter. So let's talk about that first.
Sure.
All right. It's Palm Beach Research Group.
Yeah, palmbeachresearchgroup.com, and then that's where you can find out all about me, and then also teekatiwari.com.
And do you have different programs you sell? Like, is there a daily alert program? Is there a monthly? How does it work?
Yeah, so I have a free e-letter called Palm Beach Daily, and then I have the Palm Beach Letter, which is where I write about more conservative investments. But what I'm most famous for is Palm Beach Confidential, which is where I write about my cryptocurrency investments. And you can find out all the information there at palmbeachgroup.com.
So the crypto stuff is Palm Beach
Confidential.
Yes. Okay, great. So let me ask you this. Two ways to invest. One is just follow what Teeka does, right? So you can subscribe, right? It's probably a good thing. How well have your readers done over the last 10 years?
Incredibly well.
What do you have a compounded rate of return?
Yeah, in my Palm Beach Letter, our average rate of return has been over 286% since I took it over in 2016. The average annual rate of return is 286%.
Wow.
In my crypto, it's over 2,000%
Annually
over the last 5 years. That's the average annual gain.
Wow, amazing.
Okay. It's been amazing returns.
What do you look for in an investment, and what should people that are listening, if they want to do their own research,
Yeah.
what's your thesis? How do you go about finding and separating good from bad?
Okay, so I got to take that one step back. What I believe is that 80% of your portfolio should be in safe, income-producing, blue-chip type investments. And that doesn't have to be stocks. It can be real estate. It can be REITs. It can be things of that nature. And so why do I believe that? Because the way that I've developed my wealth in markets and kept it is I keep the bulk of my wealth in safe income-producing investments, and then I take the income that is produced from those investments and I put it in what I call asymmetric risk investments. So an asymmetric risk investment is an investment that has wild potential upside. And so with an asymmetric risk investment, you don't need to put a lot of money in it to make a lot of money.
Right.
And so what happens is asymmetric investments obviously have an enormous amount of risk. The beauty of this approach, Jordan, is even if all your asymmetric investments go to zero,
You're still okay.
You're still okay. In the next year, all your capital replenishes that you lost from the income from your safe investments. And so that's what I've built over at Palm Beach Research Group, and that's what's helped so many of my readers become multimillionaires and hold on to their money. I would never tell everybody, oh, let's put everything in Bitcoin, let's put everything in Ethereum. You know, I went bankrupt in the late 90s from making, just huge one-way bets, and that was such a smack of reality for me that you cannot live like that on the edge, just betting it on black. Eventually, it's going to come up red. And so I took those lessons, and I've really helped my readers make better decisions.
Fair enough. So now let's get into that asymmetrical group.
Okay, so on the asymmetrical side, what you're looking at is you're looking at who else is involved in that market. So when I looked at Bitcoin, you said, well, what was the other thing that got you into it? I looked at the brains, the amount of brainiacs that were going in there. I went to hackathons. I might be Indian, but I don't know how to write code. Okay, I don't know anything about writing code, but I can tell a smart guy from a dumb guy. And I would go to these hackathons and I would meet with these people and I would go to these events and I would see these really sophisticated bankers and I would introduce myself and talk to them and say, why are you here? What has you interested in this? What is it about this that you love so much? And then I would reach out to insiders in the space and I would interview them. I interviewed Vitalik Buterin back in 2016, before he was huge. And I got to download this guy's brain and find out why this brilliant guy was involved in Bitcoin, why he had created Ethereum. And so that's a big thing. Who else is involved in the asset? You've got to look at that. And then you've got to look at, where's the demand for the asset going to come from? And not just Bitcoin, it could be any business. And so those basic rudimentary things, right? What's the total addressable market? What problem is this solving? If we're talking about companies, what's the track record of the people involved? And if they don't have a track record, do they have an advisory team that has a good track record? Are they good custodians of shareholder capital? What have they done in the past? Pretty basic stuff.
And are you looking about use cases in terms of so do you do anything outside of crypto or is
no, I do a lot of outside of crypto. We recommend a lot of equities. So one of the things alongside the crypto space that we've made a lot of money in is we recommended the miners when they were getting destroyed back in 2019. Because
miners
the crypto miners.
Oh, crypto miners.
Yeah, the public crypto miners, because they were getting absolutely destroyed. So when we looked at the miners, we said, okay, how much capital do they have? What's their burn rate?
How does the mining work? Explain just very quickly to the people so they understand.
So the way Bitcoin mining works is every 10 minutes, the Bitcoin protocol has a competition. It spits out a math problem, and whoever solves the math problem first wins an award of Bitcoins, which is 6 and change new Bitcoins. And so a byproduct of trying to figure out the answer to that problem secures the Bitcoin network. And miners, they call them miners, but of course they're not down there, with a pickaxe. Miners use these dedicated computers with ASIC chips on them that are built just to solve these mining problems. And so the mining business is about low-cost electricity, getting access to miners, and being in jurisdictions which of course will allow you to do Bitcoin mining. And it's an incredibly profitable business when Bitcoin is going up in value. And so one of the things that I've been doing is focusing on Bitcoin miners that, of course, have a very low cost of electricity.
And where are they? Those people would typically buy.
They're typically using hydroelectric power. So they're usually in upstate New York, or they're in out in the in West Texas, where they've got an abundance of sun. Not to get sidetracked with this whole ESG and people thinking that Bitcoin is dirty, but you have to remember that with Bitcoin, you have to go, in order to be profitable, you have to go what the lowest cost of electricity is. Well, the lowest cost of electricity in the world is, guess what?
Solar.
It's solar and renewable energy. It's renewable energy. So you have more people using renewable energy in Bitcoin than any other asset that I know of. If you look at the gold industry, it's something like 3 to 5 times dirtier than Bitcoin. If you look at the global financial system, it's 20 times dirtier than Bitcoin. If you look at the military-industrial complex, it's 50 times dirtier than Bitcoin. So Bitcoin is incentivized to use renewable energy because it's cheap. So anyway, got a bit sidetracked.
No, just on mining, yes.
Yes.
That's what mining
So that's what mining is.
So you bet on mining. You made recommendations to buy mining.
I made recommendations on the mining company. So what I looked for in that space was well-run, well-funded, low cost of electricity. And the other thing I was looking at were miners that were not selling their Bitcoin, that were so well capitalized, they didn't need to sell their Bitcoin, because this was like basically getting a free call option on Bitcoin. And that's worked out incredibly well for us. We've made just a killing on the miners, and I still think there's a ton of upside on them as well.
Awesome. All right, well, listen, all great things have to come to an end here, as does this podcast. Teeka, you've been amazing. I appreciate you letting me grill you. You know I'm a Bitcoin bull, but I think it's much better to give both sides of the story so people can really learn about Bitcoin and Ethereum. Again, guys, I own positions in some of this stuff. I told you what I own positions. I'm not selling anytime soon. But make your own decisions. I always say do the research and only play with what you can afford to lose. I think that's the best bet with these more risky stuff. But then with your safer stuff, go into the sort of more high quality assets, right?
Correct. I couldn't agree with you more. The beautiful thing about with these asymmetric ideas that have this huge upside, you don't need to risk a lot to make a lot. Like, forget about trying to hit the home run. Oh, I'm going to be the hero. I'm going to put everything on black and it's going to hit and I'm going to have my jet and all of that. Take it easy. Take it easy. Life is long. Take it one step at a time. Enjoy yourself. You don't have to feel like this all the time. Like, the water's about to suffocate you. Take it easy. Patience.
And there it is from Teeka Tiwari from Palm Beach Research Group. Especially look out for Palm Beach Confidential. That's the one that has the real good stuff in there. Seriously, check it out. It's great stuff. He's got an incredible track record. Hell of a nice guy, and he's a Bitcoin believer, as am I. And I learned a lot today, which I think is great, and I hope you did too. And get ready for next week's episode. It's going to be, I don't know, as good, hopefully even better, but this was pretty damn fucking good. Thanks for coming here.
Thanks, Jordan. It was a real pleasure.
My pleasure too.